this was probably one of the best opportunities to short in quite some time. Hindsight is 2020. But in today's video, we're going to talk about what the next steps are for the market. We're going to look at the SP 500, the NASDAQ, the large tech stocks that are starting to break below my bearish points, the VIX, the bonds, the yields, all that good stuff. All right, so without further ado, let's get started with the video. Number one, the VIX sitting at a level of support. We bounced off of major support, and the reason why watching the VIX is very, very important is because the VIX has an inversely correlated relationship to the market. If the VIX is going to be rising, the overall market should be falling. With the VIX just dropping like a rock to a level of support, this was a bearish indication for the market. This coupled with, it just so happens to be coupled with major trend line levels of resistance on the ES, which is the SP 500 futures. Not only did we hit the 6100 level on the ES, we retested this rising wedge, the bottom level of this rising wedge. We also tested it almost perfectly. And this is essentially where bears, that level, right? This level right here is essentially where people that went long down here, like we did, are going to be looking to take profits, because this at levels of resistance is where bulls tend to take profits. At levels of resistance is also where bears start to lean short. This is what ended up happening, okay? And this is the ES level. We looked at the VIX. And when you look at it on the SPX, the SPX level was 60.50. So on the SPX, JP Morgan basically held a large options premium wall at 60.50. So it's known as the JP Morgan collar trade. 60.50 was that level that was going to be sticky, or we were basically going to use it at a level of resistance. Where did we end up touching? The high, 60.49.75 on the SPX. So there were three major reasons essentially to look at this level as a level of resistance. Now, moving forward though, now that the downward move has essentially started and it's continued into the next day afterward as well, where is this going to end, right? Now, to check where it's going to end, or have we just begin, we have to look at the large tech stocks, and they are starting to show some interesting things. So number one, let's go ahead and take a look at Amazon. All right, so basically 2 days ago on the 26th is when I made I believe I made my last video, right? And what I did was I made levels of where I was going to be bullish above or bearish below on these large tech stocks. And you can see that on Amazon, we broke below the bearish level. We wicked above it, and now we're holding this level as resistance. In my opinion, this level needs to be reclaimed for us to show some sort of bullishness. If it does not get reclaimed, right, then this is going to act as a really good level of resistance, and we are most likely going to see a break of 218, 219 on Amazon. And then we will most likely try to come back and retest this 215-ish area, 215, 216 area on Amazon. That's my thought process. This is clearly, this does not look like a great bullish setup, but we are holding this. We are holding the lows technically, right? The only way it can really become bullish again is if we reclaim this bearish level. Prior support, once it gets breached to the downside, becomes resistance. Prior support, right? Once it gets breached to the downside, now acts as resistance, and we need to cross above it, okay? That's that for Amazon. Let's take a look at Microsoft. Microsoft, it was a bit more prevalent, the bullish and the bearish levels. We got a solid close below 431 on Microsoft, and it led to another move to the downside, which was easier to capture. So same concept. This is going to be the next level of resistance now. And if we don't break above 430, 431, this is going to retest 410. Honestly, this might come back, retest 415, 410 Microsoft. And that is going to be juicy. That's going to be pretty juicy. Let's take a look at Google. So Google, same concept. The levels are working pretty well here. And once again, we closed right below it. It was not able to close above. Same concept. If we cannot reclaim this, then we are going to just essentially all these large tech stocks, right? Jot down the bearish levels that I have on the charts, right? On your own charts. And look for the next major levels of support to the downside. Because if we cannot reclaim these levels, reclaiming means closing above it and holding. If we don't, and there's not enough momentum to hold and break above, then this is going, all of these stocks that are in the bearish zone here are going to start retesting lower lows. Google, I don't know if it's going to have as much room to the downside because of just the monstrous bullishness that we've seen recently. So I wouldn't be as bearish on Google. But if we don't reclaim 193, we're most likely going to retest 189, 190, in my opinion. At that point, then it's just, we might as well just break down lower and fill the gap. But I don't know. The point is that Google, Apple, like the stocks that are showing a lot of strength, you don't want to just blatantly be bearish on them. So the bearish moves are also going to be a bit more stunted. Does that make sense? So Google, Microsoft, let's take a look at Amazon. I think we took a look at Amazon already. Yeah, we took a look at Amazon. Tesla is another really good one. So Tesla was very similar to Google. It was prevalent. We got similar to Microsoft. We got to close below the bearish level the day after I shared the video, and then we got to follow through to the downside. It looks like it's trying to make new lows. We could see 400, 390 to 400 on Tesla, and this would be down here, and that is 100% doable. Like, this could happen, but essentially this 435 level needs to be, this 435 level needs to act as it needs to be reclaimed for bulls to capture upside movement again. And this, if we break above this, this is essentially where you would want to be bullish now. Does that make sense? So the bearish levels before are now the bullish above levels. Does that make sense? But yeah, just showing you guys how these levels of support and resistance worked. As soon as you got to close below it, we got followed through to the downside. These were very, very important levels. And we got just follow through as soon as there was some sort of a crack in the armor, a chink in the armor. It just broke down a bit lower. This is not the most bullish sign for the overall market. What we're seeing so far, these large tech stocks, they're showing bearish signs. They need to start breaking back above, and these are the levels that need to essentially be reclaimed. Currently, it's not beginning to look a lot like Christmas, honestly. But hey, at the end of the day, these are the levels. They're all basically right at resistance, right? So all it's really going to take is maybe a day or two of more upside, but the momentum is bearish. So with the momentum being bearish, and you have clear defined levels that people can basically short against, even if we get a bounce, right? These levels are going to be make or break levels for the overall market. And it's going to be very, very fun to see what ends up happening. Apple is also starting to break down lower, which is also very good. And it could not have just climbed forever, right? So a comeback and retest to 250 was on the table. That's nice. That's great. I don't have the levels for it. But essentially, you don't want to be bearish on Apple, in my opinion. NVIDIA, had a bit of a bounce and a rally today. AMD didn't do as well, but NVIDIA is it's trying to bottom out. This is, if you just look at this, right? It's trying to bottom out. This is a falling wedge downtrend. It's creating a bull flag above this level of resistance here. It's trying to bottom itself out. So this is not automatically completely bearish, but it really, really needs to hold this structure here. It really needs to hold the structure. If we get another break below, then it's going to be really, really tough, in my opinion, for bulls to remain in the game. And they're just going to be like, okay, like almost every single time we create some sort of a bullish move, it just ends up making another low. So this 132, 133 zone is going to be massive. It's, in my opinion, it's going to be very, very important for NVIDIA for a continued move to the upside. AMD, on the other hand, it was more so flat. Yesterday it was on Friday it was one of the only green stocks. Today didn't do too bad. It didn't break below the prior low. Same concept though. If AMD breaks below 120, it would be very difficult for people to remain bullish, and then we're going to most likely see a retest of this trend line. And that is not really what bulls want. That's the problem. There's a lot of bearish momentum. We need to see if the market can bounce back to levels of resistance and break above the levels of resistance. That's essentially what it is. Last but not least, take a look at Meta. You can see that Meta, this level, the bearish level, is currently acting as support. And yeah, that's what we're seeing so far. It's coincided with this very, very important fib level at 583.80. So it's currently acting as support. Meta is doing its thing. Netflix, however, is also acting as support, and it is not really as weak. It's still holding support. It's doing what it has to do. But all of these stocks, they're all below levels of resistance. They need to reclaim, or if it's very simple. It's very, very simple. But the problem is executing on trades at the moment. Where would you want to take a trade? Over here, while the momentum is very bearish? You could, but you would need to have a very tight stop loss, right? And this is across the board. You could take a look at Netflix. You could take a look at anything. Let's just look at it on the ES, right? Support. Great, right? Sorry. Looking at it on the fib. We failed at the 7.86% fib, which is really, really crazy, to be honest, on the ES. But do you want to be bullish into blinding bearish momentum? Never. What you would rather do is you want to see some sort of a level of support being held and a move reclaiming. In my opinion, that's what I would essentially want. And that's what it really is. Like what we did the first time, right? When the market really collapsed, we went long, okay? Because the move to the downside was not going to sustain itself. It was very, very good. And then we hit this level of resistance. We didn't go short, but, I was saying that this is where people would end up going short. But now, this is, I would argue, my point is, okay? My point is that this setup that we have right now, these past few candles, is even more bearish than this. So, that's sort of the problem. What you want to see is, what I really, really want to see is like a green day. Come back, retest maybe 6,000, 60.30, right? And if we could break above 60.30, if we could break above these like important levels, like on the bearish levels, essentially on those tech stocks, then it'll give me some sort of breathing room, or it would give bulls more of a reason to be bullish. Because even me, right, I catch the bottoms and the tops, right? I'm saying this is not a great opportunity to go long. It makes way more sense to be patient and wait for a reclaim of resistance. Or you just wait for another vomit and you just try to catch the bottom like that. But at this point, it's really not giving an amazing opportunity to go long. The whole market is not giving an amazing opportunity to go long. Instead, they're showing a better opportunity to go short. These large tech stocks were given great opportunities to short because you have a clear-cut level of resistance to short against. But for bulls, that's what you need. For bears, that bearish level needs to hold. And currently, based off of what we just saw, right, the VIX still has a bit more room to go to the upside. If the VIX continues up, that's bearish for the market. Seasonality-wise, market should be bullish. So, in my opinion, we might in general, on a longer term horizon, all of these dips are to be bought, in my opinion. I would be a bit. Here's the thing: like, everyone is assuming there's going to be a pullback in Q1. I am as well. Q1, there should be a bit of a pullback in the market. That's pretty much a given, right? But does it happen now, or does it happen after a bit of a move to the upside? I'm in the camp. I would like it to happen after a move to the upside. I would like it if, the market bounced first, but we're due for a pullback, and this could be the beginning of it. Bitcoin I was also bearish on Bitcoin, and I was showing how, I'm pretty sure Bitcoin was going to fall. In my recent video, I said Bitcoin was bearish. There needs to be a pullback to around 88 to 90 on Bitcoin. That would be great if 88, even if 85 to 88 on Bitcoin, that'd be great. And that would be a nice, solid opportunity to have a bounce in the overall market too. But yeah, Bitcoin was bearish. The VIX is also a bit bullish. The last thing that we could take a look at is junk TLT. And then, as this is continuing to make new highs and breaking above prior levels of resistance and making new highs, this is bearish. So, yeah, we got a bit of a pullback today, but it's continuing to make new highs. This is a bearish sign for the overall market. And if this ends up really, really just skyrocketing, this is going to cause, hopefully, catching the bottoms will continue to be easy, because we caught a bottom based off of this indicator before. We could do it again, and that would be ideal. The downward targets on the ES and the SPY and everything like that would essentially end up being in the high 570s, and we would fill this gap down at 576. We would come back to, we could even retest 568, to be honest. I don't see why that isn't on the table, but there's the downward signals are there. The Bollinger Bands are pointed lower. So it's going to take a lot of selling pressure for us to be overextended to the downside. Does that make sense? I know I spoke a lot, and there's a lot that I wasn't really explaining properly, but if I'm going to explain something, right? If you guys have been watching, if you guys are already this far into the video, you guys know what I'm talking about. But the fact that the Bollinger Bands are pointed lower, right? What do we like to do when we try to catch bottoms? We want price to be overextended to the downside. So we want multiple closes outside of the Bollinger Bands. When the Bollinger Bands are in free fall, it takes a lot more for the market. It takes a lot more weakness in the market for us to be overextended to the downside. Does that make sense? That's not bullish. That's not bullish at all. So, I hope that makes sense. And, honestly, just go back, look at the levels that we have to reclaim on the large tech stocks. If those start getting reclaimed, then that becomes a bit more bullish. The S&P needs to break above 60-30. The ES needs to break back above 60-30. It needs to show some strength above the 50% fit. If it does, then it gives more rise for another all-time high. But so far, we have resistance levels ahead, and that's what's currently going on. I wouldn't be surprised if we get a bounce overnight. Heading into the new year, I wouldn't be surprised if there's some sort of bullishness. We get a break above 60-50. But it needs to be definitive, right? So that's what I really want to see. Well, I want to see a definitive break above 60-50. 60-30, sorry. 60-50 as well, ideally, on the ES. But yeah, that's that. I hope you guys enjoyed today's video. Excuse me. Hope you guys have a wonderful night. Hope you guys had a wonderful trading day today. We went 3 for 3. Worked out very, very well. So I hope the rest of your week ends up being very, very well. Also, love you guys. Thanks for watching. Have an amazing day. Take care.